Doing some research into single-member LLCs? Don't worry, we've got you covered. Hi, I'm Adam and I'm the Chief LLC Officer here at StartGlobal. And today we are going to cover single-member LLCs, so let's get started. What is a single-member LLC? A single-member limited liability company is a business structure where the company is owned and operated by one individual person. This is different from a multi-member LLC, which has more than one owner. The single member, who is the owner, has full control over the company and is entitled to all the profits. Single-member LLCs are not required to consult or seek approval from any other members, as there are none. This can make decision-making quicker and more efficient. Now, it's obvious, but it's an LLC, which is like a hybrid between a corporation and a sole proprietorship. It gives the owners protection from personal liability, just like a corporation does, and offers pass-through taxation, just like a sole proprietorship does. The single-member LLC is a pretty popular choice for small businesses and individual entrepreneurs because it's flexible and simple. Unlike corporations, there are fewer formalities and less paperwork involved in an SMLLC. And finally, you can employ any number of people. The single member in single-member LLC refers to its ownership and not the workers or employees at the company. What are the benefits of a single-member LLC? Limited liability protection. One of the key advantages of a single-member LLC is the limited liability protection. This means that the owner's personal assets, such as their personal bank accounts, their home, cars, etc., are protected in the case that the business is sued or incurs debts. And the owner is not personally responsible for business liabilities. Tax flexibility. By default, single-member LLCs are disregarded entities for tax purposes, meaning the business itself does not pay taxes, but the owner reports business income or loss on their personal tax return. The IRS sort of disregards an LLC as a separate tax entity and regards the individual owning it from a tax point of view, hence the name. However, an SMLLC can also elect to be taxed as a corporation if it wants to. Just worth keeping in mind. And ease of management. Single-member LLCs are easier to manage compared to multi-member LLCs or corporations. There's no mandatory need for annual meetings, complex management structures, or agreements among owners. Forming a single-member LLC. An LLC is formed at the state level, not at the federal level. So you will have to have a Delaware LLC instead of a US LLC. This means the way to form an LLC is different in each of the 50 states. Here's a few steps that you will need to take. Number 1, choosing a business name. This is the name that your business will be known by. It has to be unique. No other company in your state can have it. Also, you need to put LLC or limited liability company at the end of it to show your business is an LLC. So, for example, StartGlobal LLC. Number 2, assigning a registered agent. This can be a person or a company that agrees to receive legal papers on behalf of your business. This could be you, someone you trust, or even a company that provides a service for a fee. Every LLC must have a registered agent. There's no way around it. Number 3, the Articles of Organization. This is like a birth certificate for your business. You file it with the state to officially create your LLC, and it usually includes information like your business name, address, and the name of your registered agent. Number 4, an operating agreement. Now, even though you're the only owner, it's a good idea to have an operating agreement. This is a document that outlines how your business will be run, its ownership structure, and much more. It's a bit like a rule book for your business. And number 5, an EIN. This is a number that you will get from the IRS. It's like a social security number for your business. You'll need it for tax purposes and when you open a business bank account for your business. And even if you don't have any employees, you still need an EIN. Running a single-member LLC. Number 1, maintaining the LLC. Most states require LLCs to file an annual report and pay a fee. This keeps your LLC in good standing with the state. Some states call the fees as franchise taxes, some as annual report fees, and so on. Number 2, keeping good records. It's important to keep your business money and your personal money separate. This means having separate bank accounts and credit cards for your business, and keeping track of all your business income and expenses. This helps show that your business is truly a separate entity from you. Number 3, business licenses and permits. Depending on what your business does and where it's located, you might need certain licenses or permits to operate legally. This could be anything from a basic business license to a specialized permit. It really depends on the type of your business. If it's just a simple e-commerce retailer or a software development agency, you might not need many licenses. So what are the potential drawbacks of a single-member LLC? Risk of piercing the corporate veil. This is a fancy way of saying if you don't keep your business and personal stuff separate, you could lose your limited liability protection. In other words, if your business gets sued or you owe money, your personal assets could be at risk. Self-employment taxes. When you're the sole owner of the LLC, all the business profits are considered your personal income. This means you have to pay self-employment taxes, which include Social Security and Medicare taxes on all your business income. And finally, when should you choose an LLC? If you want personal protection. If your business has debts or gets sued, you don't want your personal stuff like your house or savings to be at risk. An LLC can provide this protection. It's like a shield that keeps your personal assets protected against business troubles. If you want flexibility. An LLC is like a chameleon. It can adapt to different situations. For example, you can choose how you want to be taxed, like a sole proprietorship, a partnership, a corporation. You also have fewer rules to follow compared to a corporation, which means less paperwork and more time to focus on your business. If you plan to have investors. If you plan to raise money from investors, an LLC can be a good choice. It allows you to bring in investors without the formalities and restrictions of a corporation. But in most cases, these venture capital investors like these formalities and often prefer corporations over an LLC. And if you want to share profits flexibly. In an LLC, you can decide how you want to split the profits among its owners. It doesn't have to be equal or based on ownership percentages. This gives you a lot of freedom to decide what's fair and what makes sense for your business. So, there we have it. An overview of the features of a single-member LLC and the advantages and disadvantages of having one. But before I go, please head on over to startglobal.co to check out StartGlobal's all-in-one formation package that has everything an LLC needs to get started. I'll see you next time. Bye.